The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Friday the 13th, 30 minutes to the close. What do you need to know out of Europe this hour? Well, European stocks continuing to climb as investors enjoy the longest winning streak since 1999. Elon Musk bumps elbows with Armin Laschet in Berlin as the Tesla founder pushes the potential of his soon-to-be-completed German factory. We'll be live in Berlin. And with England's Premier League's new season kicking off tonight, UEFA is said to be close to a €6 billion aid package for European clubs hit hard by COVID. Let's take a look at where we are with the markets. European markets continuing to inch ever higher. 475, 474 yesterday. We climb a touch, but it's enough to keep the record run intact. Euro dollar a little higher, 117.91. I wonder whether that's down to what is happening with the data we see today, Kaylee, from the University of Michigan. I once bought a hat, a University of Michigan cap, with the sole purpose of annoying Matt Miller. I think I should be wearing it today.
Or I should be wearing it. I love annoying Matt Miller. It's so
Even
fun.
better.
It's so fun. Anyway, love you, Matt. Anyway, as you said, Guy, New-ish consumer confidence really changed everything, at least in the bond market today. Came in at the lowest level since 2011, well below expectations. That is not enough to take the S&P 500 from a record high. It is still at a record, but you are seeing big tech outperforming. The NASDAQ 100 up about 0.25%, so maybe some safety seeking in the defensives. And you really see it show up in the bond market. The 10-year yield down about 5.5 basis points. We are at 130. That is lower than where we started the week. As you said, a weaker dollar story, probably stemming from that data as well. And as a result of that weaker dollar and that data, you are seeing a bid coming into gold, a little bit of safety seeking there. Gold futures up about 1.4%, Guy.
Let's talk about the data and what impact it's having in terms of the charts that we're watching. Incredible performances being generated here in Europe. If you take a look at them on a daily basis, it's very incremental, but nevertheless, we are on the longest winning streak we've seen since 1999. As you can see, over the last year or so, just climbing, climbing, climbing. The bit that I want to really focus on is right down here. So let's get the cameraman to zoom in. Normally, you see some few greens, then you get a few reds. Right now, it's all greens. Now, those moves are not big. This is the absolute level. These are the daily moves. But as you can see, they're not big, but they all add up. And we just incrementally, Kaylee, day by day, just getting higher and higher.
Yeah, I think that's exactly right, Guy. I do not want to belittle the longest winning streak since 1999, but we aren't seeing any massive moves. We haven't had a 1% move in the European equity market since July 23rd. So as you say, it is just inching and inching higher. This isn't a monumental rally, but clearly seems to be driven by the strength of the earnings season in Europe. And I would say it's not limited to Europe either. We still do have the S&P 500 at a record high, even though we did have that disappointment on consumer confidence. So let's break down it all. Joining us now is Eddie Vanderwalt from our M Live team. Eddie, how long can this continue?
Kelly, I think you're absolutely right. There is just no bad news at the moment. The traders are willing to discount all of that bad news that's coming from consumer confidence. I think part of the reason there is that the consumer confidence reading it's notoriously difficult. It's a wavy. It's a noisy signal is the word that I'm hunting for. It's a noisy signal, and it matters more in late cycle, I think. At this point in the cycle, consumers are affected by so many different things. It's really hard to see whether that it's their own earnings that's really mattering and driving this forward. So I think traders are right to discount this a little bit.
You say there's no bad news. You got Delta. The North Atlantic's still not open. Why doesn't the market care about this stuff? The list is longer than I give it credit.
Oh yeah, absolutely. No, the list is very long, Guy. But I think the traders are looking at it. They're saying, look, if there is bad news, then the Fed will carry us through. If there is good news, then that just means, the economy is strong and we're going to keep on growing. We are early cycle, right? We've seen that people have been, they've been conditioned to buy the dip. And I think that is just going to continue for the time being.
Eddie, thanks for stopping by. Great to see you. Bloomberg's M Live editor, Eddie Vanderwalt. Let's carry on the conversation and talk more about where these European stocks are going. Norman Villemin, Union Bancaire Privé, CIO of Wealth Management, joining us now. Norman, that's the setup. European stocks just inching ever higher on a daily basis, driven by earnings. The E is still outperforming the P, as a result of which stocks just feel comfortable just moving in this way? How long does it carry on for?
Well, we think we're approaching the point where you're going to see a bit of an inflection in stocks. The earnings momentum story is behind us with second quarter earnings that are being reported right now. We're just finishing that up. I think as we go forward, those earnings comparisons and those earnings reports are going to become increasingly challenging. And then you pair that with the prospect of a Fed tapering across the Atlantic and an uncertain fiscal position out of the U.S. There's more uncertainty as we get into the fourth quarter of the year.
So is it time to get defensive, Norman?
It's not so much time to get defensive in terms of the stock names that we're looking at, but it is time to rotate towards what we like to look at called quality earnings streams from here. So earnings streams that aren't so susceptible to economic downturns, economic slowdowns, so much higher quality earning streams and not relying on PE expansion, which has been a part of the total return story, especially among the cyclical sectors through the first half of the year.
What does that mean in terms of your geographical distribution?
In terms of the geographical distribution, we're still very much in the U.S. Big tech is a place that we like a lot for the quality of their earnings. But when we come into Europe, we're looking at things like healthcare, where they do have a very attractive allocation, both in the UK and here in Switzerland, going forward here in Europe.
How is the action in the bond market, specifically the Treasury market, informing your thesis for equities at this point?
Well, we think there's been a number of technical issues that are keeping Treasury yields very low here. Obviously, the Treasury has been drawing down its Treasury general account associated with the debt ceiling that's in place. That should likely be resolved at the end of September or so. And then you've got these new fiscal packages coming that will increase issuance. So we do think yields are going to probably rise as we go into year end. And that will be a headwind in particular for multiples. And so that's going to be a challenge for stocks as well.
Volatility's low. I got a VIX at what, around something like 15 at the moment. Does that climb? Is now the time to be kind of shifting up your protection? What do you make of the current low level of volatility?
Yeah, look, we think that the overall economy in the U.S. and Europe is a few months behind, is shifting into what we like to call a mini cycle. And typically what you see in those periods is volatility tends to trend higher. We've already seen that in bond markets. And we think as we move into 2022, you'll probably see that in equity markets as well.
You're talking about European and U.S. markets. What about China and the deceleration of growth there?
Yeah, the deceleration of growth is in some sense engineered. The thing that we're more concerned about is the regulatory moves they're making in China to try and really accelerate the restructuring and reform within that economy. It doesn't look like they're going to take their foot off the gas on that. And as a result, we also don't think you're going to see them become much more accommodative in terms of policy. And so looking through year end, it's really a stock picker's market, a bit more caution here on China looking forward.
Norman, we were coming into the program talking about the amazing performance that we're seeing, the incremental performance that we're seeing in Europe. You take a look at the CAC 40, for instance, it's being driven very much by the luxury sector. The French market looks quite exposed to that Chinese story. I'm wondering whether or not actually, as we see Europe climbing to fresh highs, as we see China as we see the CAC potentially taking out its 2000 high, 1999 high, do you worry that that China ripple effect is going to land on European shores fairly soon?
We do think that the China issue is being underplayed because of the domestic recovery we're seeing in both the U.S. and Europe, especially as we go into a period where the Fed will start, if you like, at least draining the punch bowl a little bit when Jackson Hole comes around at the end of the month. And so from that dynamic, we're very much stock picking focused. We're very much domestically focused here in Europe to try and cushion against negative surprises on that front.
What would need to happen for you to be more optimistic, Norman?
I think really two things. We touched on one. We would need to be surprised to the upside in terms of China's appetite, both to step back in terms of their regulatory pressure and then as well in terms of their stimulus. That coming sooner and larger than expected. I think the second piece of the puzzle as we look into 2022 in the U.S., we would want to see if you like, the current bill that's being considered under reconciliation in the U.S. comes somewhere near the $3 trillion mark, and or those tax proposals that are being put forward for 2022 watered down significantly to get us an earnings boost in 2022.
Seems like we often forget about the tax conversation. Norman Villeman of Union Bank Air Privée, thank you so much. And coming up, Tesla CEO Elon Musk meets with Angela Merkel's would-be successor at a Tesla factory near Berlin. The electric car company is looking to gain ground in Germany's push for EVs. Will they succeed? We'll have details next. This is Bloomberg.
Hopefully this Giga Berlin, this factory here, can serve as an inspiration to people in Germany and throughout Europe for excitement about the future. I mean, we've got to be excited about the future. We've got to do things that make us want to live. You know, it cannot always be about problems every day.
I'm sure he wants to build batteries or hold up a stagecoach. Anyway, that was Tesla's CEO, Elon Musk, earlier in Berlin. The man standing next to him, of course, Armin Laschet, the front runner to succeed Angela Merkel as Germany's chancellor at Tesla's Gigafactory site. This is the country, of course, tries to modernize one of its key sectors, the auto sector. Joining us now, Maria Tadeo. She was at the event. How much of a halo effect does Elon Musk bring to Germany, to Berlin? Armin Laschet, obviously fighting to become the next chancellor of Germany. Maria, can you hear me? I'm going to assume that Maria is not there. She was out of the factory. Maybe she struggled to get back. You never know. But anyway, we'll try and catch up with her a little bit later on. Kaylee, I remember interviewing Elon Musk years ago when they opened their first Tesla shop at the Westfield in London. He lent me a car for a day. But his conversation with me that day basically centered on the idea that I'm here in Europe to try and encourage European engineers to take electric vehicles seriously. Yeah. I guess you've got to be careful with what you wish for, because Volkswagen's starting to take this very seriously now.
Yeah, totally. And my question is really, can Tesla compete with Volkswagen? Is Tesla a formidable opponent or area of competition, a threat to the German auto industry? I believe we do have Maria Tadeo. She is indeed back from the event. So excited to talk to us about it. Maria, how'd things go today between Armin Laschet and Elon Musk?
Look, Armin Laschet, who is, of course, as you know, running to be the next head of Germany, the next chancellor of Germany, went into this meeting hoping to reboot his campaign. The CDU is going for car crash to car crash. This is a very difficult campaign for Laschet and for the CDU. That was the hope. The problem here is that the meeting, to some extent, has backfired on Mr. Laschet. There was a moment in a press conference in which they were joking around, and Laschet said, we need to figure out what the future of cars will be. Perhaps it will be hydrogen. At that point, Elon Musk interrupted and said, that is a waste of time. It's electric. Now, the take from the German press is that Armin Laschet got laughed on by Elon Musk, and that this was yet another car crash. So for CDU, you know, it's a meeting that did not go as planned, and the take on this, which they were hoping was going to be positive, to get this halo from Elon Musk, to get the star power kind of on their candidate, is not really working as they had hoped for.
Maria, thank you very much indeed. Bloomberg's Maria Tadeo joining us from Berlin. Let's focus more closely on the European auto sectors. Volkswagen, of course, as we've mentioned, Europe's largest car maker. It's seeing its first significant drop in sales, thanks in part to the global chip shortage. We've got a Lamborghini launch a little bit later on. What's going to happen to the Porsche Lamborghini kind of arm of Volkswagen? Does it need to be released to really compete with Tesla? Well, let's try and answer some of these questions. Craig Trudell, who covers global autos, joining us now to give us his take. How significant will the final kind of up and running status of Tesla in Germany be in terms of reshaping the German auto industry? Volkswagen, as I say, starting to really get into gear, if you can do so with an electric vehicle, in terms of its production.
That's exactly right. I mean, what we've seen is that Tesla has started to really do well in Europe with the Model 3, in large part thanks to China, because if you remember, the plant in Germany was actually supposed to be up and running already. So it's months behind schedule. There was talk at the factory today about, hopes that maybe they'll get final approval for the factory in October. But for the time being, Tesla is actually in a situation of maybe not getting the sort of demand that it was hoping for in China, and using some of that capacity to actually to put them toward exports for the European market, where sales of electric vehicles are really strong. We've seen a situation where Volkswagen, to your point, has made a huge offensive in the space, not just with the Volkswagen brand, but also Audi and even down to Skoda. So this is a case where these two will be duking it out for years to come in terms of leadership of the electric vehicle market in Europe.
Well, and they're both dealing with their own challenges. Volkswagen, too, in July saw sales in China plunge 28%, more broadly down 19%. The chip shortage is biting. How well are they equipped to handle it?
They really talked about this idea that their expectation was the second quarter was where the chip shortage was going to hit them hardest. And they've talked about how that expectation kind of shifted a little bit, where they actually felt like the third quarter they were going to be pinched further. But I think we're in a situation where production really, was affected in the second quarter, will be affected in the third quarter. And what we've seen is a lot of these car makers really have very, very thin inventories, and a situation where, this time of year you have summer shutdowns anyway. So, they're not going to replenish inventories. They're going to be really tight on supply. We're probably in for a few months of pretty weak sales for the automakers. It's not a reflection of demand issues. It's really a case where, if you go to a car dealership right now, it's slim pickings.
Craig, we recently ran a fantastic story. Herbert Diess went on holiday and really struggled to find charging stations. I really struggled to find charging stations. You can build EVs, but you've got to plug them in somewhere. When do we really start to see a significant impact of the effort that's being made to build out the network?
It was a really fascinating moment. You're referring to Diess posting on LinkedIn. He was very characteristically blunt about the idea that he was not at all pleased with his experience. It was both, stations being down or chargers being down at stations, also just not a premium experience. So, we've heard rumblings for months now about some of the car makers not being thrilled with sort of efforts to get the infrastructure in place and whether or not it's sort of up to standard. It's possible that we'll see some of these cooperations. That particular charging station that Diess was not happy with was a venture between Volkswagen and some other automakers. We may see, a move by some of these companies to take a little bit more of a hands-on role in this, depending on just how much it matters to them. Because clearly, we saw in the case of Diess, he's not happy with being up to snuff. And to your point, I mean, it's not just a simple matter of making EVs and, snap your fingers, people will come. You really have a situation where a lot of buyers need to be convinced that this is going to work for them. Home charging really will go a long way, but not everybody is able to charge at home. And there are concerns about being able to get to destinations without running out of range.
Craig, I have the pleasure of hosting Surveillance Early Edition with Matt Miller every single morning at 5 a.m. And he gets very, very excited about all things car. I less so, but he was super hyped about the Lamborghini launch today. Can you just tell me why I should care as much as Matt Miller?
The Countach, right? I mean, it's going to be really neat. I think for a business story, I also think that Lamborghini is just fascinating. It's a brand that, potentially could be sort of held up as one that could kind of rival Ferrari in terms of, its recognition and, sort of luxury sheen and performance reputation. We've seen Ferrari as just this massive success story since Sergio Marchionne took it public. And there's been a lot of buzz about, what's Volkswagen going to do with this brand, because it does have, so many brands so many mouths to feed. And a lot of buzz about, do they try to list something like Lamborghini? Do they try to list something like Porsche and sort of cash in on the fact that they've got these assets that maybe would command a premium valuation of the type that Ferrari has been able to.
Craig, great stuff. Thank you very much indeed. Craig Trudell, who heads our coverage of the European auto sector. Kayleigh, I think we should just be clear. Those are the Lamborghini Countach from my childhood.
Yeah.
Those are the ones that everybody used to lust afterwards, lust after, if I can get the words out, with the cool doors. It was an amazing car at the time. But the new one, I think, looks a bit more kind of traditional to the new Lamborghini. Like it looks a little like there's kind of Aventador, Huracan kind of written all over it. But nevertheless, again, the valuations on these companies could be super high.
Yeah, totally. I mean, looking at these cars, to me, it just kind of looks like an elephant sat on it or something happened to it. It's very flat, and I wonder how Matt Miller can even fit inside because he's a pretty tall dude, guy.
He is a fairly tall dude, but I imagine if he had the opportunity of driving one of those old Lambos, he would definitely take the opportunity. The difference under the skin, I guess, is kind of where the real differences lie in terms of drivability. Anyway, Stefan Winkelmann is the Lamborghini CEO down at St. Agata in Italy. He's going to be joining the team a little bit later on. 3 p.m. New York, 8 p.m. in London, 3 a.m. if you're a Lamborghini fan over in Hong Kong. This is Bloomberg.
Live from New York, I'm Kayleigh Lyons with Guy Johnson in London. Alex Steele is off today. This is the European close on Bloomberg Markets. And Guy, I bet Alex is going to be really bummed she took a long weekend because we're actually going to talk about one of her favorite subjects other than commodities, Lord of the Rings. Amazon Studios is moving the second season of its Lord of the Rings television series out of New Zealand to the UK. The studio says the move aligns with its strategy of investing in production spaces across the UK. Lord of the Rings is one of the most expensive TV series ever made, and I bet Alex is so excited to watch it when it does come out, I think in 2022, but it's not going to be filmed in New Zealand, Guy.
No, it's not. Though, to be fair to Alex, I'm not sure she'd blow up her long weekend just to come and talk about this, despite her loving the subject. You can't get in. This is the problem. It's a fairly straightforward story, really, isn't it? New Zealand looks lovely, but if you can't get your actors in, there's going to be a bit of an issue. They're building a lot of real estate in terms of film studios here in the UK at the moment, and we've got some fairly nice landscape here as well.
For the record, Alex Steele writes in. She's super excited about this.
So we're wrapping up the session Friday the 13th. Stocks look like they're going to finish a little bit higher over here in Europe. As we've been discussing throughout the program, these aren't big gains on a daily basis, but they all add up. Incrementally, we're seeing, obviously, day after day of gains. And as you can see, Europe, once again, a sea of green. The gains aren't big. As I say, as we've been talking about, the FTSE is up by 0.4%, the CAC is up by 0.2, the DAX is up by 0.2%, the Belgian market's up by 0.2%, the Polish market is up by 0.2%. Not big gains. However, incrementally, as I say, they continue to add up. We are on the longest winning streak we've seen since 1999, 10 incremental days higher. Again, not big gains, but they are gains. So let's show you the Stock 600 and what is happening here. This is the session chart. Going sideways, but yesterday we were 474. Today we're 475, nearly 476. We're up another 0.2%. We're a point higher. Over the week, over the year, let's take a look at kind of where we've sat in terms of the moves that we've seen. As you can see, it's a fairly straight line. What is significant about this is there haven't been many backward steps taken by these markets. They continue to move ever higher. And that is certainly something that I think is interesting to dwell on. But I guess we've got this fight between P and E. At the moment, the E is leading the P, and the earnings season was quite good. But are we at peak earnings? I guess is one of the questions that you have to ask yourself. We're up by 19% year to date, nearly 20%. Really strong performances. Let's take a look at what is happening with the FTSE, the DAX, and the CAC. In some ways, actually, I want to focus on what is happening with the CAC 40, because, again, we're getting up towards new records. So you want to pay attention to what is happening here. We're just inches away from retaking the levels we saw, and it's been a long time coming, back in 1999, 2000. Other markets have been taking out levels on an almost sort of daily basis. The FTSE 100, the DAX in particular, fresh records being hit time and time again. In terms of what we look like over the last 30 years, let me just show you the CAC, just a little bit of history here. We all remember, obviously, what happened in 2000, but this was the last time, basically, we were at these kinds of levels. We are at, we're at 68.95. 69.22 is the closing record. 69.44 is the intraday record. We're really not very far away. Now, the gains have been big since then, but nevertheless, this market is only just retesting those kinds of levels. But nevertheless, it is being driven by an interesting collection of stocks. What are we seeing? We're seeing the luxury stocks are a really big driver. But some of the other cyclicals, Airbus is doing really well. L'Oreal continues to be a big prime driver as well. But as I say, it's the core products like LVMH, Kering, MS, that have really been big drivers. In terms of what we're seeing in the sector breakdown today, let's just kind of wrap things up this Friday the 13th just to see what really has been moving things. Real estate up by 0.8%. The utility sector bouncing back. Food and beverage. It's a more defensive narrative here in Europe today. Bottom end of the market, bit of weakness in technology, bit of weakness in energy. But nevertheless, as you can see, the bulk of stocks, Kaylee, very much higher today.
Indeed. And Guy, let's talk more about the CAC 40 because, as you said, 21 years after it last hit a closing record, the index poised to do so again. And it is luxury stocks that are really powering that rally. Joining us now is Katrina Dudley, Franklin Mutual Series investment strategist. Richemont, which of course is the maker of Cartier, is one of the top names that she owns. So, Katrina, at these levels, would you be interested in adding to that position?
I think the reason we like Richemont is just it's so well positioned. You know, during COVID, they actually sold out of Cartier bracelets. It was surprising. In a recession, you would never expect us to have shortages of luxury goods. You know, the COVID crisis and the pandemic gave us an opportunity as a value investor to be able to buy what we saw as a quality franchise trading at discounted levels. The stock's done well for us, so at these levels, it's not quite a buy. But you know, I really do believe in that franchise. I do believe in the value they're creating. And we're getting another advantage here with Richemont, which is the changes on the ESG angle. So their governance is really improving. And so for us, that's a great part of the investment thesis and the story.
Katrina, where do the risks lie to some of these luxury stocks? China has been a really big driver, but we take a look at what is happening with the crackdown that we're seeing across a number of industries right now, and you do wonder whether sort of conspicuous consumption could be next.
Look, there's 3 stages of consumption of a Louis Vuitton handbag. The first is you buy that handbag in China as a Chinese consumer. The next stage is you buy it outside of China. And then the penultimate is you buy that handbag at the Paris flagship store and you take a picture in front of the Eiffel Tower. Obviously, that last stage has not been happening, and even the second stage hasn't. But we've seen those Chinese consumers continue to want to buy their handbag and their luxury goods. They've continued to be employed during COVID. They haven't had those outlets for spending, and we're seeing the luxury stocks as being a really big beneficiary of that.
So does that mean you see a good deal more upside on a broader level for the CAC 40, not just in terms of the luxury names, but others like L'Oreal and Airbus? Do you think they can continue to power that index higher?
Yes, I think what we're seeing in Europe is the fact that the market is really edging higher because we haven't had any blow-ups. I mean, Italy is managed by Draghi. It's a really stable economy, and that's not just good for Italy, it's great for the whole region. Look over at Greece. Greece was blowing up just a couple of years ago, and you now have a pro-business person leading that, and that's great. So what we see for Europe is good not just for Europe, it's not good for Italy as well as for Greece, it's also good for France and their markets, because France, while we talk about them selling their luxury goods to China, they also do sell a lot of those luxury goods to Europeans.
Katrina, is this industry better positioned after the pandemic than it was before the pandemic?
Yes, I think that what we've seen across so many industries is the investment in their multi-channel. So you've had a real pickup in e-commerce, and we're seeing it here in the luxury goods sector. So the fact is they're transitioning people away from having to go into the store, which you're showing here, and buying it there, and actually being able to get that same consumer experience online. That expands their market because it means that they don't just have to have people buying things that are close to the store, they can actually expand it to other geographies. And I think that that generally is very, very good for the sector.
So you talked about all these factors that are good for Europe as a whole. What else do you want to be buying?
I like Airbus at these levels. I think that obviously from a competition perspective, you are looking at, Boeing is on the back foot at the moment, and Airbus is very, very well positioned. You've seen them increase up their delivery guidance. Obviously, COVID coming back and the Delta variant is a bit of a concern for their airline customers. But as we look at a longer term basis, and that's how you have to invest, you have to look forward, you don't want to look backwards. We're positive on a stock such as Airbus.
In terms of the challenges that the cyclicals are going to face in Europe, again, I want to come back to this China story. Airbus has outperformed Boeing in China significantly. I think we saw the first 737 MAX going to China recently to get recertified so that aircraft can fly there again. How much longer is that advantage going to be there for? And do you ultimately think that some of these European cyclicals can continue to drive forward in the way that they are, if we are going to see maybe the growth rate starting to abate back on a global basis?
If you take a look at the growth, actually, a lot of companies' growth has been constrained by shortages. So you've had the well-talked about semi-shortage, but you've had shortages in other areas in things such as transportation. You can't get belly space because we're not flying, and you can't get freight space because there are just not enough freighters in there. So what I think is that while we thought that 2021 could have been the peak in earnings, we're actually seeing a spillover of demand into 2022. So we think that that momentum continues. So I don't think you've really seen the end of this cyclical rally.
You mentioned you were looking for value. It doesn't get a whole lot cheaper than the UK. What do you do there?
Look, we can go shopping anywhere. That's the advantage of running a global fund. And I think as I look at the UK, some of the interesting opportunities for us are in domestic franchises that have been really overlooked. So have a look at some of the home builders there. Brexit we got through much better than I ever anticipated. I think the pandemic may have helped that. But in terms of some of these domestically oriented franchises are trading at really good valuations, and we think that there's some great opportunities which are leveraged to the UK consumer and also are in the UK as well.
Do you think private equity is going to get to those opportunities before the public markets do? Because that certainly seems to be the narrative at the moment. Huge numbers of UK stocks being taken out. Why is the public market being so sort of slow to respond where the private market can maybe see those opportunities?
I think in the private market, you do have a different cost of capital, and they also are a little more brutal in terms of taking out costs and everything. But I do think that the public markets offer you so much more. You have just such a much more ability to make a difference, to impact companies from the social side, from the environmental side, from the governance, and also to create long-term sustainable franchises. So I think that while private equity is taking out companies, they're not taking them out often for the long term. They're taking them out for 3 to 4 years, and they're going to come back as public equities anyhow. But from my perspective, we are looking at some great franchises run some really strong management teams, particularly in the UK. They're investor friendly, they're ESG friendly, and I think that that's a great place to go shopping at the moment.
Katrina, great to see you today, particularly to see you in the office. Thank you very much indeed for joining us today. Katrina Dudley of Franklin Mutual Series, thank you very much. Okay, we're wrapping Europe up. We're done for the day. These are the final numbers. A little bit of a tick higher during the auction process. The FTSE 100 closing up by 0.3%. The DAX up by 0.2%. The CAC up by 0.2%. Small gains, Kaylee, but they add up.
And they continue to climb higher here in the U.S. as well. All right, Guy, coming up, we're going to talk about a subject that I am trying to become more intelligent about, European football. Barcelona may still be recovering from Messi's move to Paris, but the football world may have a pandemic recovery package coming soon, $7 billion in value. We'll have more on that next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Rishika Gupta, and you're looking at a live shot of the principal room. Coming up, Jack Lynch, Horton Mifflin Harcourt President and CEO. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. In the UK, wages are rising as companies scramble to hire enough staff to help them recover in the post-lockdown period. According to the Recruitment and Employment Confederation, there was a near record number of online job advertisements posted last week. The British economy grew faster than expected in June, putting more pressure on employers to hire. Cigarette maker Philip Morris International has moved closer to buying a British maker of asthma drugs. The board of Vectura Group backed the tobacco giant's $1.4 billion offer over a lower bid from Carlyle Group. Neither bidder can raise its offer further. And Bloomberg's learned that in the European soccer organization UEFA is putting the final touches on what could be a $7 billion rescue package. It's designed to help teams in Europe recover from the impact of the pandemic. The rescue also would impose new salary caps to prevent teams with super rich owners from gaining an unfair advantage. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Kaylee.
Ritika, thank you. Well, joining us now for more on that UEFA package is Bloomberg's David Hellier. So, David, treat me like the foreigner and non-aficionado of European soccer that I am. What do I need to know about this package?
I think the first thing you need to know is that, and it's pretty obvious, that football has been through the toughest financial period during the course of the pandemic. For most of the past 16 months, football has played in front of empty stadiums, which means catastrophic decline in revenue. Gianni Agnelli of Juventus has said that European clubs have lost 8.5 billion euros. Deloitte said that revenues are down 13%. Most football clubs don't make a huge amount of money anyway, so this has been really catastrophic for them. So UEFA is trying to put something together. It's not a sort of bailout. It's a kind of loan package that will help some of the the most cash-starved clubs. Remember, Barcelona, one of the biggest clubs, well, the biggest club probably in Europe, if not the world, recently had to let go its best player of all time, Lionel Messi, because they couldn't afford his wages. His wages were very, very stratospheric. But Inter Milan, another storied club in Italy, has just sold 2 of its best players to balance the books.
And you are seeing some of the richer clubs, Manchester City, PSG, who are backed by very deep pockets, picking up those players. Are salary caps going to be effective? Are they going to be a temporary factor? Or do you think ultimately we are going to see player deflation in terms of wages?
Player deflation is something that may happen, but it's really, really hard in football because it's such a competitive business that, football clubs can't afford to let players go, their best players, because then they lose absolutely millions in sponsorship and gate money and all the rest of it. The salary caps that UEFA are hoping to come up with, it's a really difficult issue. It doesn't seem to work as well as in the US. The US seems to have a very, very much tighter system. So the financial fair play system that UEFA has been using for the last few years was reasonably successful, but it hit a bit of a rock a couple of years ago when PSG and then later Man City challenged it. It's very hard to keep a lid on these super rich clubs.
How ultimately do you think, therefore, we are going to see football evolving? We've obviously seen an attempt this year at a breakaway league that ultimately didn't happen. But nevertheless, if the big clubs, the rich clubs, should I say, are being throttled back, that pressure is going to be there, and there are going to be others that are going to want to join them because you change the nature of the way that football is structured in Europe, then the potential for the more storied names, as you say, some of the bigger clubs, Barca, obviously one of those, then ultimately that revenue could be there if they were unshackled from the current structure.
Yeah, I think a Super League of sorts is still a possibility, but I think this time it might be UEFA that brings it forward. I think the key, in my view, the key factor that led to the disaster of the Super League was that there was no relegation. promotion and relegation is such a key part of European soccer that I think any new Super League would incorporate a relegation and promotion, factor. Remember the Premier League in England, which is now the most successful league in Europe, was itself a breakaway league. It broke away from the old First Division, but it basically retained promotion and relegation. So each year, 3 teams go up and down. I think that's key to this, this concept working. And I don't think it's dead for a minute. I think, the big clubs want to play each other more often. They want to capitalize on their fan base and stuff.
Certainly the PSG team now looks very much built for such a championship. David, we're going to leave it there. Thank you very much indeed. David Hellier on the story surrounding European football. The Premier League, I think, kicking off tonight, the new season. Brentford Arsenal. I think we're in West London. Breaking news out of the United States on what is happening with evictions. Kaylee.
Indeed, a federal judge in Washington has ruled that temporary ban on evictions put into place by the Biden administration until October can indeed remain in place. What's interesting to me, guys, is that we also yesterday had a decision from the Supreme Court about the eviction ban here in New York, and the court actually eased that, knocking down a provision that gave renters a shield if they were experiencing hardship because of the pandemic. So the Supreme Court going one way, but this federal judge in Washington going another, saying that ban can indeed remain in place.
Well, I think it was interesting at the get-go of the way that the Biden administration structured this. And remember, this was all done kind of on the fly because it seemed as if they very much dropped the ball at the White House in terms of extending this. I think there was always an appreciation that the legality of it was going to be called into question and kind of could be a problem, but they were prepared to do it because it just brought them a bit of breathing space. And now the challenges, as you say, are providing a little bit more opacity as to how the process is going to go forward from this. But I think they appreciated that, and I think they knew that going into this. Anyway, we will continue to monitor it. I suspect we're not done with that legal challenge, those legal challenges. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Disney is rising today. The entertainment giant reported better than expected quarterly results and a jump in the streaming customers. The company's flagship online TV business, Disney Plus, grew to 116 million subscribers in the fiscal third quarter. Meanwhile, theme park reservations are running ahead of the quarter that just ended, despite the coronavirus surge caused by the Delta variant. In Germany, the would-be successor to Chancellor Angela Merkel met with Tesla CEO Elon Musk. The place, Tesla's new factory that's being built outside Berlin. It'll give Armin Laschet a chance to burn his credentials with forward-thinking voters less than 2 months before the election. Laschet has been falling in the polls. That's left an opening for the Social Democrats and the Green Party. Credit Suisse is making another attempt to reinforce its management team in the wake of heavy losses. Former UBS executive Axel Lehmann has been nominated to head the board's risk committee, and the former chief risk officer at Lloyd's, Juan Columbus, has been named to a seat on the Credit Suisse board. And that is your latest business flash. Kaylee Guy.
Ritika, thank you. All right, it's Friday. That means we got to talk about what's coming up in the week ahead. Of course, on Monday is the deadline for 13F filings. On Tuesday, we hear from the chairman himself of the Federal Reserve. Powell will be speaking at a town hall, plus some important U.S. economic data with retail sales for July. We are expecting them to fall by about 0.3% month on month. Then on Wednesday, we're going to get the Fed minutes, maybe some clues into the path they are thinking on tapering their guy, and then more inflation data coming out of the UK and the Eurozone when we get CPI on Wednesday as well.
Yeah, it is a massive week for retail. Retail sales, Walmart's. You got a whole range of retailers out next week. In terms of what else we're watching, what do we got Thursday? I think the Thursday story is about the Norge Bank. Got a rate decision there. We've got claims, of course. It is Thursday. And Friday, UK consumer confidence. And one I certainly always watch out for, Deere, which I think is fascinating in terms of the insight it gives us, not only in terms of the industrial story, but what is happening with China. It's such an interesting company in terms of what it can say about the global economy.
And supply chain issues as well. We've seen that showing up in some of the industrials and the input costs that they are facing and the challenges they are facing in getting their products out to market. That's going to wrap it up here for the European Close on Bloomberg Markets with Guy and I. Coming up, Jack Lynch, Houghton Mifflin Harcourt CEO, joins Balance of Power with David Weston on both Bloomberg Television and radio.
I'm going to be heading off to Bloomberg Radio. The cable show is what we shall be doing. Normally, the cable obviously gives you a clue. It is hosted by Alex and myself. She's not here, so I'm not sure what half the cable is, but that is what you're ultimately going to get. It's going to be a great show, though. It's going to be on DAB digital radio in the London area. I'm looking forward to it. Kaylee, have a great weekend. This is Bloomberg.